Welcome back. Well, we still have earnings to look at, despite the Diwali color that you saw on screen. The earnings continue with banks. Actually, Bank of India's second quarter numbers are in focus. Net interest margin is under pressure, like it is for all banks, but loan growth is excellent at 14%. Joining us now is Rajneesh Karnatak, the Managing Director and CEO at Bank of India. Good morning, Mr. Karnatak, and season's greetings. Happy Diwali to you and to everyone at Bank of India and your families. Well, let me start with the margins itself. Yes, 14 basis down. We are seeing that on an average it's been 12 to 14, though some banks have been able to beat it. Do you recover from this level in Q3 itself, or will it take one more quarter?
Yeah, good morning, Latha ji. Thank you so much for having me here. A very happy Diwali to you, to entire CNBC TV 18 team, and also to your viewers.
Thank you.
So as you rightly said that yes, NIMs are under pressure and our NIMs have dipped and we have closed the global NIM at 2.55%. However, if you see our domestic NIM, they are much better at somewhere around 2.86. As far as the going forward NIMs are concerned for Q3, we think that it should be improvement, because whatever the repricing had to happen in the credit side has happened in the Q2 quarter, because the last cut, as you remember, has happened in the month of June 25, and the entire cut has been taken up in the quarter of Q2. As regards the repricing on the liability side, some repricing is yet to take place, and we feel that the entire repricing would happen in the Q3. So we should see a better uptick as far as the net interest income is concerned from the Q4 quarter.
Even if there is a rate cut in December, which some people are expecting because the October inflation is likely to be 0.5% or even lower. So, even the governor said that there is space to support growth. If there is a rate cut in December, will you still be able to post a slightly higher margin? Because your overall guidance is 2.6, right, for the full year?
Yes. So let me clarify that first of all, we would not speculate on the rate cut from the RBI side. Yeah. Considering the fact that the inflation is under control, retail inflation is on a lower side, there is an expectation for that. So, but if the rate cut does happen, definitely it will impact the net interest income for all the banks, because obviously the 63% of our book for Bank of India is external benchmark, which is linked to the repo. So there will be some impact, definitely.
But are you confident of 2.6% for the full year margins? That's your guidance, right?
Yeah, that is our guidance at present, considering the fact that assuming that there is no further rate cut.
Okay. Oh, okay. So we will have to take it as it comes. Mr. Karnatak, what is your sense about asset quality? You have a decent 16% rise in margin in MSME loans. Your overall exposure to agriculture is 20% of your adjusted net bank credit, which is, the priority sector requires 18%, you have 20%. Are you worried about, any loan deterioration? How is your SMA1 and SMA2?
Yeah. So as far as the asset quality is concerned, if you see our results, Latha ji, that we have a very good asset quality in the Q2, and our fresh slippage was only 895 crores. And if you see the slippage ratio also it is at 0.14 only. And we have improved our slippage ratio. Our gross NPA and net NPA has come down. Our gross NPA is now only 18,000 crores. Our net NPA is somewhere around 4,000 crores. And in percentage terms also, our gross NPA is 0.65, 2.65. And the net NPA is also at 0.55. So we are improving as far as the asset quality is concerned. As regards our SMA numbers, there also if you see 5 crore and above that we have published. So there our figure was around 7,000 crore in Q2, which is now at around 6,000 crore in Q2, which was around 8,000 crores, which was there in Q1. So there also we have improved. And as far as the SMA above 5 CR is concerned, it is now below 1% of our global loan book, standard book. So there is an improvement in that, and SMA 1 and 2 is also not very high. As I said, the overall SMA number is within 1% of the standard book as on the Q2 of 25.
Got that. So no concerns at all. Your credit cost is really low at 0.28, and you think there is scope for it to go even lower, right? Okay, let me come to the loan growth once again.
Credit cost is low, Latha ji, because of the fact that yeah, please go ahead.
Go ahead. No, go ahead, sir. Complete your credit cost argument.
Yeah, just wanted to give more clarity and color on this credit cost part. So credit cost is low, as you rightly said. That is also because of the fact that we have been able to contain our slippages in Q2. Since the slippages were below 900 crores, obviously the credit cost also has come down to 0.28%, which is lower than the 0.55, which was there in the Q1.
Okay. Loan growth, you have done 14%, but you're guiding only 12 to 13% for the full year. Will you surprise us on the upside? Are you guiding too conservatively?
Yeah. So loan growth has been 14%. You are right on a global side. On domestic side, in fact, it is much better. So if you see the domestic growth in the RAM segment, our agriculture has grown at 13%, our MSME has grown at 16%, our retail has grown at around 19%, and our RAM has grown at around 17% on a YOY basis. Even the corporate credit had grown in double digits in the domestic side at around 10%. So when we are saying the guidance of around 12 to 13%, yes, the guidance is conservative and we are fully confident that we'll be surpassing this guidance.
Okay.
Only thing is that because of some geopolitical issues which are there, the war issue and the tariff issue, we are just trying to give a guidance which is like a 12 to 13%.
Oh, right. Got that. Let me come to the ECL. You must have done some internal calculations about expected credit loss. How long will you take? What may be the impact on the balance sheet and P&L in the first year, FY27?
So in the first year, FY 25-26, see, as you know, the guideline, only the draft guidelines has come out.
Yeah.
We are internally going through that. All banks are going through it. So what we know is that it is effective from 1st April 2027. There is a 5-year leeway which the RBI has given to all the banks. And there is a provision which is to be made for the stage 1, stage 2 and stage 3 assets. The ballpark calculation that we have done, that's a very preliminary estimate. In that, I can say that on the CRAR front, we see an impact of around 1% on the CRAR on an annualized basis. So 1% per annum, which means that around 5% in the 5 years. And as far as the clarity on the CRR is concerned, see, we have already done a net profit of around 4,800 crores in the half year. And this year, we are estimating in this financial year FY26 a net profit of around 10,000 crores. Given that fact, our CRAR will improve to that extent. And further, 1 percentage point of our Bank of India CRAR equals to around 4,500 to 4,600 crores. So we will be having a 2% increase, 2.0% increase in the CRAR by FY26. And 1% shave off should come because of the ECL.
Have you also counted because of Basel III norms?
And I do not think much impact will happen on the CRAR or the profitability of the bank.
Fair enough. Okay, I'll discuss about the Basel III on another occasion since we're running out of time. I wanted to just get one point in. Did the government get in touch with you about consolidation at all? The buzz keeps coming every now and then. Can you enlighten us?
No, we have no idea about that. It's a government's prerogative and there is no consultation on that.
Okay, and you're not raising any capital?
No, not at present. In this financial year, let me clarify, from the board, we have taken approval for raising our CET1 and CET2 for around 5,000 crore in FY26. CET2, we may be coming, Tier 2, we will be coming in this quarter, in Q3 quarter. And as far as the equity is concerned, there is no plan as on date for raising any equity this financial year.
Okay, well, we are actually out of time. We will invite you yet again for a more detailed conversation. It's just such a bunch of earnings that came over the weekend that we have to keep things short. Thank you very much, Mr. Karnatak, for joining us. And once again, season's greetings to everyone at Bank of India.
Thank you, madam. Thank you, Lataji, and to the entire team of CNBC TV18. Thank you.
Okay, thank you, sir. I just want to say that, the market has ushered in Diwali Day with a lot of gusto. Just as we were, at 10 a.m., it looked like the market was giving away some of its gains. The gain on the Nifty dropped to about 100, 110 points, but it's charged up once again. And I am not surprised who is leading it. It is the banks. Almost every banking stock that has announced numbers has surprised on the upside in terms of margins, surprised on the upside in terms of credit growth, and the regulator has been, getting kinder and kinder to the banks. So my sense is that the Bank Nifty, which is already at an all-time high, is likely to push the Nifty to fresh all-time highs very soon. We wrap up on Bazaar on that cheerful note. Chartbusters coming up with another bunch of earnings interviews.